Hello from just north of Chicago. It's May 7th and this is your Volatility 411. The S&P 500 is higher by another 1%, measuring around 2880. Yesterday's highs came in just below 2900 and the broad market continues to chop between 2700 and 2950. The VIX Index is currently around 31.5. That's down about 2.5 handles on the day. The Volatility Index is very near the lowest levels in about a month. The VIX Index is seemingly grinding along its 100-day simple moving average without breaking below it. That line comes in at 31.16 and it's something that I'll keep an eye on. Now it's certainly worth noting that the month 1, month 2 VIX future spread is in a very slight contango again. The last time the front of the curve closed in contango was February 21st. It's also worth noting that the spread between 20-day SPX historical vol and the current VIX index is even to slightly positive. Now, in other words, after 2+ months of negative spreads between short-term realized SPX vol and the VIX, that spread may be moving back to a more normal positive relationship. Now, the May VIX futures and options will expire and cash settle on the 20th, so that's just less than 2 weeks away. There's one more weekly expiration ahead of the standard Mays going off the board. Open interest in VIX futures has been inching higher in recent weeks. Now, looking at the options, an interesting spread went up in the November cycle this morning. From the looks of it, someone sold 5,000 of the Nov 30 calls, which are the at-the-money options with the Nov futures right around 30. They also bought the Nov 6500 strike call spread 15,000 times. In total, they collected about $2.1 million in option premiums. So, if held and the Nov VIX future expires below 30, they realize that premium. They would lose about $15 million if held and the Nov VIX future expired right at 65. They would start making money again in the event of a VIX settle north of 80. Tomorrow we're going to get a non-farm payroll number, which will be massive and likely a huge spike in the unemployment rate. We'll see how the broad market reacts to those data points. Thank you very much for tuning in.